U.S. mortgage rates are now at their lowest point in 15 months, and experts say they could continue to drop after the Federal Reserve is expected to slash the federal funds rate next month. The declining rate comes after the labor market's July job report that showed the unemployment rate is increasing. So what does this all mean for consumers? Well, Bank of America's Chief Executive Officer Brian Moynihan was on Face the Nation, where he talked about the current economic climate. Take a listen.
But if you look within it, they're still going to restaurants and they're taking travel. But on the other hand, they're spending a little bit they're going to the food store the same number of times, spending a little bit less, which means they're basically finding bargains and things like that. And you're seeing corporations cut price to respond to that. And so it's the way the economy works, and it's slowing down. And that's where we have to be careful, because we've won the war on inflation. It's come down. It's not where people want it yet, but we got to be careful that we don't try to get so perfect that we actually put us in recession.
And joining me now with more on this is CBS News business analyst Jill Schlesinger. And Jill, I want to start right there with that comment. Do you agree we've won the war on inflation?
I never like to say, war is won until we're there, but it appears that. I mean, as Brian Moynihan said, we've seen the inflation rate come down from over 9% at the peak, which is 2 years ago, and now we're at 3%. We'll get another report about the consumer price index later this week, but we've seen the rate come down. But that said, we are left with higher prices than we would have had this period not been so strange, where we came out of COVID and everyone was spending and prices went up. So prices are still about 20% higher than they were before COVID. And, in a normal economy, we always see some inflation. Prices do go up, but this is about twice that pace, which is why so many households are still under pressure.
Right. And I want to talk about mortgage rates, because we saw them tumble last week to their lowest since April 2023. But this, of course, comes after the latest jobs report showed the unemployment rate had jumped to 4.3% in July. So explain why and what this means.
Well, I want to talk about mortgage rates. They came down. I wouldn't use the word tumble, okay? We are still at about 6.5% for a 30-year fixed rate mortgage. And yes, that is down from the peak, but that is still 2 times where we were before this inflationary spike and interest rates went up. So we know that people who were buying homes back during the beginning of the COVID years, they were locking in 2.5%, 2.75%, 3%, maybe even 4%. So 6.5 is definitely progress. We're not at 8 anymore. But you know what? It's still hard to buy a house. Home affordability very low. Now, in terms of the job market, as Brian Moynihan said in that piece, we are trying to get the economy to slow down. And part of that means that the unemployment rate will drift higher. Now, we've had 4 consecutive months where the unemployment rate has gone up, and that's been a portent of bad times ahead. But again, overall, the 4.3% is not too scary. I think the odds of a recession have increased, but we are not currently in a recession. And if we see the inflation rate continue to come down and the labor market not actually fall apart, but just slow down, we should escape a recession this part of the cycle.
And Jill, I just wonder, for prospective home buyers that are watching the market right now, what kind of advice do you have for them in terms of timing?
I host a daily podcast. People call in every single day and they want to know, how do I buy a house? What should I do? The old advice is true. You've got to run the numbers. Maybe you can buy a house with a 6.5% mortgage and then think that you'll refinance over the next 10 or 20 years. Maybe you can use an adjustable rate mortgage. Maybe you're going to buy a new home and the builder is going to give you an incentive to buy that house from the builder by buying down your mortgage rate. You've got to be creative. But at the end of the day, if the numbers don't work, don't kill yourself. I think the idea that you have to buy a house to be a successful person in this society is kind of old-fashioned. You don't have to buy a house. You can rent. You can sock your money away. You can save for lots of things. Everything's going to be okay. Be patient. Run the numbers. Don't stretch so that you can't reach your other goals.
Yeah, that makes a lot of sense. Jill, thank you.
Sure.